Okay, so here are the information. So finished goods inventories and the raw material A and raw material B. And you can see the units number, 300 units finished good, 200 units A and 100 units B. And you know cost, 200 for finished goods, 20 for A, 50 for B. Replacement cost, 25 for A, 45 for B. Net realizable value, 180 for finished goods. Raw materials not available. That means you cannot sell them, right? You cannot sell them. Okay, so first of all, let's think about the finished goods, right? You start with the finished goods. Do we need to write down finished good? Well, you have to evaluate the cost versus the market, right? The inventory has to be reported at the lower of cost than the market, right? And the market, okay, the net realizable value, okay, that's the market. So you compare that two numbers. Finished goods, what's the cost?
200.
200.
Good. What's the NRV?
180.
180.
Right? So do you need to write down?
Yes.
Yeah.
Yes.
Yeah, you need to write down, right? Because the market is 180, is lower than the cost 200. So you need to write down for 20 for each unit, right? So
Sorry, when you say mark down, do you mean like write off?
Write off, yes.
Okay.
Write down, write off, yeah. Write down, yeah.
Okay.
You can also say impairment, right? Impairment.
Okay.
So we are done, right? It's easy. Can I move on?
Yep.
Did we forget something?
You just said when you write down the finished product, you need to write down the raw materials as well.
Okay, thank you. Thank you. Okay, in the exams, make sure you know this. So finished goods is written down, right? Now you want to evaluate raw materials, okay? Now you want to evaluate the raw materials. Okay, so now, should I evaluate A and B one by one, or should I evaluate them together? Okay, there's some important information here. Oops. Each unit of finished product requires 3 units of A and 2 units of B. Okay, did you have a sense of group of A and B together? Because only when B and A and B together, they can make finished goods, right? So in this case, you consider A and B as a group. You're gonna evaluate this group, okay? You're gonna evaluate this group. Okay, so let's take a look. Raw materials A, there are 200 units, right? What's my cost? 4,000. Okay. And raw materials B, 100 units, 50 times 100. 5,000. Together, remember, I'm evaluating this together. Together as a group. So I'm gonna write it here. As a group, cost 4,000 plus 5,000 equals 9,000, right?
Sorry, is it this particular example that you would just group them together, the raw materials A and
Yeah,
B?
because
Or is that, or will there be examples where you just have to do it individually?
if you only need a materials A to finish this, for these finished goods, then you just evaluate A.
Okay, so it depends on the question.
Yeah. Yeah.
Okay.
And then replacement cost, right? Replacement cost. So times 200, that's 5,000 to replace, oops, 5,000 to replace the A times 100, 4,500 to replace B, okay? So now I want to compare my replacement cost. That's 5,000 for A plus 45,000 for B. Together, I have 9,500. Okay, so should I write down my raw materials?
Yes.
Yes. So my raw materials inventory should be reported at the lower of cost and the market. Here, the market is the input perspective, replacement cost. The lower of these two is 9,000. So you are already reporting a lower cost. So you don't have to write it down.
Sorry, that was the answer to the question?
Yeah.
Is that
so
okay?
You write down finished goods by $20 per unit, but after your evaluation on the raw materials inventory, there is no write-off needed. Does this make sense?
Yep.
If it was opposite, then you just have to write. I mean, you have to report $500 of write-off.
Yes. So suppose let's change this question a little bit. Suppose 21. Okay. Let's change this number to be 21. Okay. Suppose the replacement cost of raw materials A is 21. Okay. So then this one will be okay, this one is gonna be 4,200, right? So then my 4,200 plus 4,500, I have 8,700, right? So now as a group, the raw materials replacement cost is 8,700. The cost is 9,000. So the lower of these two is 87. So you have to recognize a impairment of 300, right? 300. So does this make sense?
Yes.
Okay, awesome. So I already told you, right? There's going to be one question like this in the final. So and there's the one question like this in the quiz, I think. I think in chapter 6 quiz, there's one question like this. So make sure you practice, you understand. Because this is something new you never learned, right? All the other stuffs you have at least learned in 2100. This is new things you haven't learned before. So I have a question. Yeah, go ahead, Tim.
Yes. So would you have a chance that you would get both the replacement cost and the NRV together? And then do you choose the NRV over the replacement cost because it's preferred by the IVERS?
That's very interesting, right? You think about it, why they have raw materials A and B. Why do you think they have the raw materials A and B? Do they want to sell it, or they want to use it for the production?
Oh, okay. Yeah, just to use it, yes.
Right. So then in that case, the net realizable value is often unavailable, right? This is NA, right?
Okay. Yes.
Yeah. So because the purpose of you are not trying to flip the inventory for money, right? It's not like my business is about selling raw materials A, right? For a profit margin, right? That's not the business, right? The business is I use raw materials A and B to make finished goods, and I sell finished goods, right?
Okay.
Yeah. So then what matters is about the replacement cost, right? So if the raw materials A caught on fire, how much is gonna cost you to replace it, right?
Mm-hmm.
If it costs you less, That means your current value should be lower. You have to write down your current level of the raw materials, right? So right now your value is 9,000. If your warehouse was on fire, all this $9,000 is gone. It's only going to cost you $8,700 to replace it, right?
Mm-hmm.
So then why you report your inventory at 9,000? You should report it at 87.
Yeah, 87.
That's why you write off 300. Yeah.
Okay. Okay.
Yeah, but you ask an interesting question. What if they also sell raw materials, right? If they also they use raw materials A and B, but at the same time they also sell it, right? But then that's an interesting question. Why they would buy this from you, right? If you buy, unless you are kind of you are in the middle, right? You are like a wholesale or something. The manufacturing, and you are a wholesale, and then you have the retail, right? Because otherwise, why people buy from you? They should buy directly from the manufacturer, right? Why would they pay you higher price, right?
Yes.
Yeah, if that's the case, like you said, you probably have to estimate. This is my idea, okay? I don't want to say this really loud. Maybe you have to estimate what's the percentage of my inventory is for resale, what's the percentage of my inventory is for production, right? For those inventory level for production, you have to use replacement. For the resale inventory, you need to use net realizable value. Does that make sense?
Yes. Yes. Okay.
Yeah.
Okay.
In the exams, I will not give you questions that complicated. Right?
Okay. Okay. Yeah, nothing crazy like that.
I'm scared by this midterm.
Okay. Okay. All right. Thank you.
Yeah. I really have high expectations on the second component. Okay. I think given it was so obvious, you know that it's going to be owner's contract question, and I loaded up the questions and the videos, right? I really have high expectations for the component too. And then when I see your response, I was scared. So yeah, I will try to yeah. So in the midterm, I will definitely not put you into that kind of situation. You will have to struggling with, or which one I'm going, right? Replacement or net realizable, right? Generally speaking, right? The IFRS, ISB, they want us to use the net realizable value, right? For those items, for resale items, right? For the inventory.
Yeah. Okay. Okay. Thank you.
Question.
Yeah, go ahead.
So what are you gonna use the processing cost of $40 for?
$40 for, okay. So processing cost, that would be part of the finished goods, right?
Yeah.
Yeah. So here is what happened. Let me think if I'm right. So 3 units of A, right? So 20 times 3, 60, right? 2 units of B, 2 times 50, 100. 100 plus 60, 160, plus $40 processing fee. That's your 200.
Okay.
That's your cost of 200.
I see. Thank you.
Yeah, does that make sense?
Yeah, it does.
Okay, good. Yeah. Okay, this is important. Make sure you know, understand. Okay, you know how to do this. So I'm going to stop recording.